America's trade deals with Asian economies give them more time to improve their industrial sectors. Australia's rental property investors borrow at their fastest rate in 10 years, and consumer confidence falls in New Zealand. That's coming up in our 5 Things in 5 Minutes on Monday, November the 3rd. And then, in our deep dive interview, we talk to Tatsuya Terasawa, the chairman and CEO of the Institute of Energy Economics in Japan, about why there's such a focus on critical minerals supply chains.
The embargo almost paralyzed the whole auto sector with many relevant industries. So it had potentially a huge impact on the Japanese economy. And this is the weaponization of rare or critical minerals.
But first, in 5 and 5 with ANZ, ANZ's chief economist for Greater China, Raymond Yung, has taken a closer look at a swathe of trade deal announcements that came out of the big APEC summit late last week in South Korea. He saw two key themes.
One is an asymmetric cut in tariff rates. Asian economies will cut more, whereas the US maintains the current rate but just grant some product exemption. For example, Thailand will eliminate 99% of product tariffs. Malaysia and Cambodia simply agree to drop trade barriers on US goods, but the US still largely maintained 19-20% tariff rates on these countries. The US will also get access to market and resources in Asia. Thailand and Vietnam agreed to address non-trade barriers against U.S. medical services and pharmaceutical products. These Asian economies also promised to buy more U.S. goods, agricultural products, energy and aircraft, semiconductor as well.
Over the weekend, the S&P 500 closed up 0.2% and the Nasdaq rose 0.6%. The yield on the 10-year Treasury was up 1 basis point to 4.1%. West Texas oil futures rose 0.7% to $60.90 a barrel US, but they may move more after OPEC Plus decided last night to pause output increases in the March quarter after a small one next month. Gold fell 0.5% to $4,013 US an ounce, and traders will be looking at a weekend announcement from China of the scrapping of a tax incentive to buy gold. The US dollar index rose 0.3%. The Aussie dollar fell 0.2% to 65.46 US cents, and the Kiwi fell the same amount to 57.24 US cents. Number 2. Raymond says the second theme was that China's ongoing moves to upgrade its industrial capacity to higher value products has set a great example for other economies in Asia of what not to do and what to focus on.
That set an example for Asian economy to follow. And so far, the Asian export, especially Chinese export to the US, has been very strong. Taiwan is also another example because of the unique advantage in semiconductor. They have the competitive edge, and that is not easy to replace. These products are less price sensitive and very complicated. These set an example for other Asian economy that by simply exporting low value product and price sensitive product that will make exports very vulnerable to US tariffs.
Number 3. In Australia, bank lending to the private sector rose 0.6% in September from August. That gave an annualised growth rate of 7.3%, the highest in 2.5 years. ANZ economist Maddie Dunk points to a shift within that lending.
We're seeing this handover from business credit, which has been the most dominant driver of private sector credit recently, and we're starting to see that housing credit is picking up. So housing credit's at 6.3% on an annual basis. That's the highest since late 2022. And if I look at investor credit in particular, what we're seeing is that investors are becoming more active as rates have come down. That's got more investors back into the housing market, and annual growth in investor credit's at its highest since 2015.
Number 4. New Zealand's consumer confidence fell in October and remains near historically low levels, according to ANZ Roy Morgan's survey out on Friday. ANZ senior economist Miles Workman says inflation is a key issue.
We know that there's a very significant correlation between how consumers are feeling and inflation. Households hate essentially two things: high cost of living and also an uncertain labour market. And look, right now we are in a bit of a situation where the recent CPI data has accelerated, and of course we've got labour market data out next week, which is likely to show a further loosening in labour market conditions. So I think the big picture here is, look, there are still certainly pressure points on households through both of those channels, and that clearly is weighing on consumer confidence.
Number 5. Consumer confidence may be down in New Zealand because inflation is up, but households are seeing more positive signs for rises in house prices. Expectations were up from 2.5% growth over the next year in September to 3.1% growth in October. Here's Miles again.
In a historical context, it is quite normal for house price inflation expectations to be a little bit volatile month to month, but there is a tentative evidence here that expectations for house price gains are starting to lift.
Miles Workman there. Now, in a deep dive interview, I talked to Tatsuya Terasawa, the chairman of the Institute of Energy Economics in Japan, on the fringes of last month's AFR Asia conference in Sydney, about why there's such a focus on critical mineral supply chains at the moment. Firstly, could you tell us about something that happened to Japan in 2010 that really sets the scene for this?
Well, in September 2010, a Chinese fishing boat intentionally collided into the Coast Guard ship of Japan. And naturally, our Coast Guard arrested the crew, released all of them, but kept the captain. But the Chinese government reacted very fiercely, and then they initiated an embargo against rare earth export to Japan. I have to confess, at the time I was working for the Japanese government, I had no ideas about rare earth. But the director responsible for the automobile sector rushed into my room and really shouted that the Japanese automobile sector is paralyzed. And I didn't know why, but rare earth was used to produce magnets. And without magnets, missing a magnet, you cannot manufacture a vehicle. So that came to us as a shock. Eventually, we had to release the captain, but I was responsible to set up the policy package to avoid future repetition of such an incident.
Just to understand how crucial it was for the auto manufacturing sector in Japan, you need the magnets to make the cars, but why is there not a regular supply of magnet materials somewhere else other than China?
Well, rare earth supply at the time, the Chinese share was nearly 90%. And with less than about 10% from the rest of China, you could not keep the production of the automobile sector. And remember, Toyota and other Japanese companies at the time were famous for just-in-time production. So they didn't have the inventory of magnets or rare earths to produce magnets. So the embargo basically almost paralyzed the whole auto sector with many relevant industries. So it had potentially a huge impact on the Japanese economy. And this is the weaponization of rare earth or critical minerals, dependent on a certain single source. And if that single source intends to use it to push for their goal, can have a massive impact on the importing country.
So what did Japan do in the following years to reduce that vulnerability?
Well, literally next month, in October, I designed the response package to deal with rare earth. 5 pillars. The first pillar was to enable to use less rare earth to produce vehicles or other things, be more efficient. The second was to develop alternative materials to replace rare earth. The third was to strengthen recycling. And the fourth was to developing other alternative sources of rare earth. And the fifth was stockpiling of rare earths. And these packages put together, at the time, we allocated $1 billion of budget, at the time very substantial, to enhance our resilience with regard to rare earth.
Was this concentration of supply in China an accident, or was it something that was planned? I.e., was this just an accident of history? They just happened to be rare earth minerals in China and the processing was in China? Or was this part of a longer-term strategy?
I don't know Chinese intention, but the fact that they initiated this embargo of rare earth right after this arrest of the captain shows that they had a strategic plan to use this rare earth as a weapon. Frankly, Japan was not aware of its vulnerability. So China had a very good plan, strategic idea, whereas at the time, Japan had no idea. And that came as a painful lesson to Japan, and that's the reason why we developed a policy package to reduce our dependence on China with regard to rare earth.
Tatsuya Terasawa there. That was part one of our deep dive interview. Tomorrow, we'll talk about the lessons the rest of the world can learn from that incident in 2010. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, November the 3rd. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.